Hello, this is Robert Guillaume. Thank you for joining me on Your Money, Manage It. I will be discussing principles that will empower you to manage your finances made easy. Welcome, ladies and gentlemen, to today's podcast of Your Money, Manage It. And we have a special guest to start 2023. His name is JayBumbalough, and he is with Shoreline Wealth Advisors. They have offices in Indianapolis and in Newcastle, Indiana. And Jay, I believe you're located in the Newcastle office, correct?
That is correct.
Great. Well, Jay, welcome. And as we start this new year of 2023, I was kind of looking at some of the financial aspects that your company deals with, and I'm just going to let you share your knowledge on a couple of areas because, you work with individuals or families or whatever in the areas of financial planning and financially setting objectives and goals, and then financially having the perseverance to stick with, what they have established. And I think that is so important to people as we enter this new year. So I'm going to just let you run with that.
Yes, thank you. And nice to be here on the podcast with you. And yeah, there's no better time to start this conversation than now. We're at the beginning of a new year. And I think that a lot of people close out a year in 2022 and they're refreshed, looking forward to what they might want to accomplish in 2023. And part of that would be their finances. And one thing that we really focus on in our company on the wealth advisory side is that we focus on the plan. And that is listening to our client, listening to what their goals are, listening to their financial objectives, listening to things that might be coming their way, whether it's retirement or a new child, or a kid going to college. We basically just learn to listen. And then from there, we try to build a plan for our clients. And then obviously, this is over a period of time. We take a lot of time in the upfront part of planning, and no time better to plan than the 1st of January. So here we are in January 2023, and I think that would be a great thing for families, business owners, individuals to just sit and reflect on what they might want to accomplish in 2023 and 2024 and 25, et cetera.
Yeah, I would totally agree with that. And let me, without putting you on the spot, and I don't want to do that at all because this past year, 2022, has certainly been a roller coaster financially. I mean, we have seen high inflationary rates. We have seen fuel prices rise. We have seen all the prices in the grocery stores rise. And at the same time, people have taken a little bit of a kick in the backside with their, 401ks, 403bs, and those types of scenarios. So optimism for 2023? I mean, I would hope so.
I'm optimistic every day, truthfully, and I'm optimistic for 2023. I believe in the country. I believe in our entrepreneurs. I believe that tomorrow will probably be better than today, and so I'm an optimist by nature. And so, yeah, I'm optimistic for 2023. And I would say that along with your question, our clients, because of the planning that we do with our clients, they remain optimistic. Their behaviors are not bad, even when times are tough. So a lot of investing and a lot of the success that comes with investing is patience and time and behavior, because ultimately, if you could remain somewhat optimistic, those returns will be delivered to you. It just takes some time.
Jay, on the planning side, and sometimes we're speaking to individuals who are simply left hand to right hand and just really trying to just make it week to week, month to month, and so forth. And that's really, really tough for some families, and they may say, well, we just don't have the means to be able to look at a portfolio or whatever right now. But how might someone look optimistically at their position, even if they're in a tough position? And can they sit down with you and you can kind of share with them some advice on certain areas?
Yeah, I think the best starting point is to sit down as a family and go through a budget. Here's the money. Here's the money that's coming in, and here's how we're spending the money, and then determine, is there any way in that budget that there could be extra savings? There could be extra income earned. So I think that's the very first place to start. And what we call that is your story. So our client's story has to be written. And a lot of that time it starts with the budget. And so they have to look at their budget and really self-reflect, just really dig in and take an interest in it and see if they can change any of those numbers and what those numbers mean to them.
Thank you. And I say thank you because back when one of the very first podcasts on managing your personal finances was establishing a budget. And a book that I have published on the subject, literally in the book, there are examples on how to assemble a budget. And I think that is so huge for individuals and families to have a budget and know where their financial position is on a monthly basis or whatever. I think that's just huge, Jay, and you really hit it. One other aspect that I'll just throw out for someone who is thinking, looking back into 2022, thinking ahead to 2023, maybe they have a portfolio and they're looking to do something with their portfolio. And of course, we're going to tell them how they can get in touch with you here in a few minutes. But diversification in a portfolio, important in your point of view to diversify that portfolio?
Very, very important. That's one of our tenets. That's a belief that we have. We believe you have to be diversified between small companies and large companies, between international companies and domestic companies. So that is extremely important. Diversification is one of the keys to investment success.
I would totally agree. One question that might come up with individuals too. My wife and I both were in careers where we were fortunate enough. She was with the U.S. Postal Service, and I spent most of my career in the field of education, and so we've been able to walk away with pensions, and as well as our investment portfolios, and now we're old enough that we're even drawing from on Social Security benefits. But what do you see? The days of pensions, as my wife and I know, have kind of waned a great deal, haven't they? I mean, people need to think beyond that because they're just not there as they were years ago.
Yeah, we don't see many pensions anymore, especially for young people entering the workforce. You don't see pensions much. And also we understand that the government is increasing the limits that you can put money into 401ks or IRAs or 403bs. Those are the retirement vehicles where you save through your employer or you contribute yourself through an IRA. So we're seeing higher levels of contributions going into those certain vehicles. And pensions are no longer they are not a popular item as they were, many years ago. So you have to save for yourself, and that we are seeing a lot more of that. And that, I guess, that is an area that we really focus on: is what is the best way to save? Is it to put money into 401k in a pre-tax, or is it post-tax into a Roth 401k? So those are just some details that we look at when we're trying to help our clients or trying to help a prospect.
That's great advice, Jay. And, on that note, looking down the road, and, I think my wife and I have been blessed in the fact that, we have been able to close out our careers in a comfortable position. And, we're very fortunate. However, that doesn't just happen overnight. So from a professional point of view, when and how would you tell younger people to begin to plan for that time when they're saying, hey, maybe I need to start thinking about a retirement in so many years from now, 30 years, 20 years, 10, whatever. What's your advice on, when someone should start planning?
We believe you should start planning when you get your first job, and setting aside any money that you possibly can, because the compounding that takes place when you're in your 20s is, as they say, the seventh wonder of the world. You cannot catch up. A person who starts in their 30s and wants to contribute a little bit more than a person who starts in their 20s, they just can't catch up. So you really want to start planning as young as possible. And one thing that's been really nice that the government's provided is the automatic enrollment in 401k plans. So maybe an employer requires that an employee at least put 1% or 2% or 3% of their payroll into their 401k. So we think that is a great thing for people. It makes you plan even if you don't even know you're planning. So it helps for your future, because every dollar that you save when you're younger is just a dollar you get to spend when you're older. So it's just really important that the money's not going anywhere except to your other pocket. So it's just a savings vehicle. And one thing you brought up on Social Security and the way that, where you're at in your life, one thing that we see in our office a lot is people jump on Social Security really early. But one thing people don't realize is that the Social Security increase is 8% per year. That's not the cost of living increase. That's just the benefit increase. So a lot of times when we're going through our planning with our clients, we really tell them to delay their Social Security because it's one of the best investment returns you can possibly get without any risk.
No, I would agree. From a personal perspective, I would say you're right on, and I fell into the age bracket where, my years were still at a perfect time. All right. Because some people are a little bit later now,
Right.
So, but mine was perfect. My wife, hers was perfect. And so, it really worked out well for us. And you're so correct. So there are three, real quick, Jay, I noted on your website, there are three elements that your company sort of stands for, or foundational pillars, I should say. One is called design. One is stated as build. And then one is stated as protect. Can you just take a couple of moments and kind of expound upon those a little?
Yeah, it all begins with designing a portfolio, just designing a portfolio for people. And a lot of that's through discovery. And discovery is asking questions and really understanding the client's goals and objectives and their dreams. We like to listen to people's dreams. We want to help them achieve their dreams. And this is all financial dreaming and possibilities. So that's the design phase. We lay that out. We understand who's important in their family, what their values are, what their goals are, what's core to them that can't be moved. And that really lays the foundation of the design. On the build side, building is really how we put investments into a portfolio. And you talked about diversification earlier. So we build out a portfolio that's tailored exactly to the design. If a person tells us that they need this return, then we build a portfolio to get to that return. So this is the build part is extremely tailored to how a person wants to achieve their goals. And then the protect side is just looking at how money is going to be spent down the road and protecting the capital, making sure that capital is protected from events like we had in COVID, events like pandemics that we've only seen once in 100 years. So we do a good job of protecting the investment, and then also looking at passing it on, whether that's through gifting to children or charitable planning. Those are the protections that we make, because really we're the steward of the family, and most of our clients are family stewards. So that we take very serious our job of helping them design, build, and protect what they've worked for all their life.
Great information, Jay. Great information. And I hope the audience is listening and taking this all in, because what a way to start 2023 with your advice. And, there's one area that I know we're not going to have time to cover today, because we're about ready to close this segment down. But I'd love to bring you back in a short time here, maybe the 1st of February, while we're right in the midst of tax season, and have you discuss some aspects that you just mentioned early on before we started the podcast on taxes and tax management and that sort of thing that you and your company really get into. And it's a shame we won't have time to get into all that at this moment. But if you're willing, I would love to bring you back, and we can take that as a topic and run with it a little bit.
Yeah, I would love to, because really our differentiator between other investment providers is that we are CPAs and also registered investment advisors. So we are a one-stop shop for clients. And we believe that if you want to increase your investment returns, you have to minimize your taxes. And we're experts at both fields. So I would love to come back and explain some areas on way to minimize taxes, because in the end, that means more money in our clients' pockets.
Sure, exactly. JayBumbalough, what a great segment here on Your Money, Manage It. Would you tell the audience how they might, contact you if they hear this and they say, wow, that's someone we need to really speak with?
Yeah, our web address is www.shoreline-llc.com. Our phone number is 877-521-4541, and we're here to help. That is our mission. And if you go to our website and read about our stories, really, we're here to help people. That is our job.
Well, Jay, I appreciate you as a guest this Monday, and Happy New Year to you. And I look forward to touching base with you again, and we can cover, I hope, that subject on tax management. So, Jay, thank you so much for being a guest today.
Thank you for having me.
Thank you for joining me on Your Money, Manage It. My book, How to Manage Personal Finances Made Easy and Avoiding the College Debt Trap, can be found on Amazon and the bookshop. I will also include the link in the description of this episode. Find me on Facebook, LinkedIn, and Instagram, and join me again next Monday. Thank you for listening.